trader. Hi, I'm CA RUDRAMURTHY, author, trader and trainer, welcomes you to this pre-market report. Yes, yesterday I was repeatedly telling there will be a short covering rally and I said FIIs are short 81% and this cannot stay for long, and all those who are shorting will see the short covering. Let me tell you, yesterday open was at 17,500 at the same time when SGX was indicating, whereas close is at 17,700. At Nifty level, we saw from open to the next day's close a move from 17,500 to 17,700, which is where markets are now opening around. And let me tell you, 17,750 is one hurdle which Nifty has to cross on a closing basis. And if we take off 17,750, next 17,840 and 18,000 can be on the card. But let me tell you, very important point, that this up move what you are seeing again now can anytime turn. Always I say, if you want success in trading, you have to understand two important points. Number one, you can't be right on all the trades you take. It is not there in the game. I repeat, you can't be right on all trades you take. It is not in the game. That means making money overall is possible for sure 100%. But if you want to make money on all the trades you take, not possible. This is where you have to cut your losses short and run your profits long. And unless you learn these very important tricks of trading, irrespective of what trading system you use, whether you use technical charts, you use whatever technique, candlestick, market profile, order flow, whatever, you will not make money overall, because you have to firmly understand and you have to have that right mindset to know that you can't be right on every trade you take, but I can make money for sure overall. And another very important point, you have to have your position sizing, stop loss, risk management in place in order to understand this. More important, if you see now, FII data is just very going closer to even or balance. So yesterday, in fact, they had a selling in cash market to the extent of about 800 crore. But if you see the positioning which is there in market, slowly that short covering came yesterday. So what next? I feel this up move from now has very low risk reward to go on the long side. We are now not at 17,200 or 17,500, or earlier when I was shouting with thumping on the table, buy, we are not now at 15,200 to 15,400. And look at the decoupling. Indian markets are up after Jackson Hole meeting, and if you see US markets, they are down 5 to 6%. Take for the whole year 2022, Indian markets are again up, whereas Dow Jones is down 15% for the year 2022, Nasdaq is down close to 20%, S&P are all close to over 20 to 25%. So when US markets on an average are down 20 to 25% for the year 2022, we are on the upside. That means that 20% decoupling or variation or outperformance is what you are seeing in Indian market. And yesterday there came the big news, 10 crore Demat accounts have been opened in India, and this has happened very fast. Thanks to COVID, thanks to Corona. But let me tell you, the money what retailers are putting in market, can that stand forever and for long? 10 crore Demat account is definitely a great achievement, but retail money cannot keep the market up for a long time, and any small panic, these guys will run for cover and they will be getting out. However, I say real thanks to SEBI margin rules, because of which leverage is very low, or else at any point of time this leverage would have made the markets tank in a big way, because we don't have much leverage because of the rules of SEBI in terms of it can be peak margin, it can be 50-50 ratio. So by default when leverage is coming down, then what happens is people throwing the towel and getting out because of high leverage what they would have taken, and now they have no option but to get lost. These people will be just now not available in market, which is good to some extent to bring stability. No doubt high leverage will always give much more volatile moves because of panic what sets in, but now to some extent this is definitely getting cut because of the rules of SEBI and exchanges. However, let me tell you, use all the up move from now on to slowly come to cash in terms of trading position, and in terms of investment position also, whatever you have to move to quality right now from quantity, and from stocks which are not performing and stocks which are all laggards, get out of them and move to quality at this point of time. And you have to be very agile, flexible and alert for any turn which can happen in market. So yes, I am using the rise from now on in market to lighten my long position, book profit and move towards quality stocks, and then wait for opportunity for the next big move from market. I'm sure all these updates are giving you heads up, and also for live market updates in my Twitter handle, I am Rudramurthy. I'll be giving you lot of market news and updates for free. I'm sure you don't miss this quality update. Thank you so much for watching the video. Signing off, Rudramurthy.